we go. Here 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 we go.
I love that tune.
Me too. Me too. What's going on, Oscar? How you
Ah,
doing?
all fun, all bunch of fun stuff.
Yeah, yeah. It's fun. It's like a party back there.
I'm almost completely moved in down here. Then I got to redo the top floor. Ah, it's a nonstop, nonstop.
Yeah, I understand. I totally get it. Well, we have a great show for everybody.
Oh
This is
yeah.
Focus on You with Phil and Oscar. I'm Phil. The other guy is Oscar. He looks like Santa Claus. I know. So everybody thinks, he's going to give them gifts at the end of the year, but you're not.
You
You're
know
going to
what?
miss
That
out
that
on the
that brings up a
gifts.
good thing because the guy we're having today, Mr. Rick Cusio, actually did sit on my lap while we were doing a closing on the refinancing the mortgage. So we'll talk about
Is
that later.
that so? Okay. I knew that's how you guys roll, so that's not surprising to me. But hey, you know what? We're here. Ricky's here. Let's do this. Folks, we're going to introduce you to none other than the man himself, the myth, the legend, the guy you hear about that knows a guy, the guy that knows a guy who knows
Can
a
we
guy.
do the disclaimer that anything he says, has nothing to do with PNN actual?
Well, Ricky is a professional above all things, so we don't have to say that because
Okay, well,
he is
I'll start the timer now.
is the Rocky Balboa of mortgages. When they say no, he says yes. When they go up, he goes down. When they go down, he goes up. Come into you right now, none other than the man, the myth, and the legend, Mr.
And
Richard
and if
Cusio.
Hudson United says no, he will personally finance your mortgage.
We're gonna eat lightning and we're gonna crap thunder here at Hudson United Mortgage when we're doing your mortgages, ladies and gentlemen. Hey, yo, Mick, you wanna throw me one? Hey, Father Carmine, you wanna throw me down one of them blessings you got, so I don't get beat up too bad while I'm helping these new first-time home buyers? I could definitely do that. You know,
I warn you.
Rakia, nomine Patri et Filii et Spiritus. Oh, I love it when he does that. Thanks for having me on, guys. I appreciate it.
Nobody knows movies like Ricky. Nobody.
That's true. He reminds me of the guy. If you ever see the movie Diner, there's one character that just walks into camera spouting some line from a movie and then disappears. That's,
It's me.
No cuts. Just roll it. No cuts.
now, Rick, I don't know if you heard before. I was telling people that, Phil says I look like Santa Claus. I said that reminds me when we did the refinancing on the house. You were sitting on my lap and make sure I was signing the right papers.
I was, and not only that, but you were smoking the chocolate cigar candy that I gave you as
Yes,
well.
yes, yes. You get chocolates. I mean, you want Ricky to help you with the mortgage.
Cigars. Oh my
Yeah.
goodness.
I bring treats to the closings. I always do gifts and something nice for the attorneys, for my clients, because it's a process, right? And it's probably and it really is more stressful for the buyers or the clients than it is for me. I did my own mortgage last year, bought my own house, and I was sitting there thinking, you know, I'm like, why is everybody so stressed out about this? I'm like, to me, I guess it was just another day, but it wasn't stressful for me when I was doing my own loan. I knew the process, but for other people it is. And that's why I'm there. I want to make sure that, expectations are met and that you guys are educated on the process. I'm always in communication, and I'm always responsive when it comes to people giving me phone calls multiple times a day, shooting me text messages, whatever it may be. I try to alleviate the stress and make it as less stressful as possible for you. Obviously there's always going to be stress, but if I can do anything to help alleviate that, that's part of my job.
I mean, it's the biggest outlay of money people have ever do. So that A is stressful. There's so many hoops you have to jump through when you buy a house, and having people like you that know the business, have been there. You've seen the ups and downs. You were there, when you got me the 2.99 rate,
Mhm.
and now you're here helping people with the
5% higher.
5% higher, and still walking them, taking them off the ledge when they're like, "What? I can't buy a house now." So here's my question. I was going to buy a house when it was 2.9. Now it's 7. I think I'll wait for what? For the rates to go down again? Is that
I mean, you can always, if that's the game somebody wants to play, it is your money at the end of the day. I can't tell you what to do with it. I can only offer my opinion and my advice. And this is what's going to happen. You can buy that house for X amount of dollars now. It's a seller's market, and that's where we're at. And it's probably going to be a seller's market for quite a while. Um, and let's just say the house you're looking at might be $400,000 today at 7.5%, 8%. Great. You buy now, you can always refinance later and get a lower payment. If you don't buy now and you wait for those interest rates to drop, now the sellers are also aware of what's going on in the market because they're like, hey, when should I sell my house? Now they know rates have dropped 2%. So your 7.5% rate is now at 5.5%. So guess who theoretically can qualify for a higher mortgage? You, Mr. Buyer, or you, Mrs. Buyer. So what's the seller going to do? Boop. Now your house is 450,000, not 400. So would you rather buy at 400 and refinance later, or would you rather buy at 450 and have that lower rate? You're going to be financing more money down the line if you wait. I always say, listen, it's an allocation of funds. That's all you're doing. You're moving it from bank ABC to your property, and property is always going to appreciate. You will get equity.
so that will alleviate people say I don't want to buy now because the rates went up. It's like, yeah,
No, but
you're
I love how we when we had you were featured today in our Power Up lunch, and you mentioned some things that I was just like, what, that's going on, that's happening, that's in the market. I would love for you to just let's start over a little bit and just have you introduce yourself, tell people who you work for, what you do, all of that good stuff.
So again, Richard Cusio. I am a senior loan officer with Hudson United Mortgage. I'm a residential loan officer. I'm licensed in the tri-state area and in Florida. So that's New York, New Jersey, Connecticut, and Florida. Um, and there are some very exciting things that have happened this year in the real estate industry, especially within the past probably 4 months, in order to combat inflation, in order to try to keep people's monthly payments as low as possible. We have some exciting products out there, but there are some new overlays coming into the real estate market as well. One of them is the most important is going to be the new conforming loan limit as of now for 2024, and a lot of banks have already adopted this new conforming loan limit. The conforming loan limit across the country is 700 and was $726,500. Okay, now they raised that up to $750,000. So any loan amount that is not in a high balance area, let's say like Chicago or New York City, Westchester County, Rockland County, Long Island, maybe some other places in the country that I don't know might be high balance. I would say maybe like Los Angeles or something like that. However, that is not high balance. Any loan amount, not purchase price. We're talking about your financed amount, your loan amount. Any dollar, any penny over 750,000 is considered a jumbo loan. So a conventional loan is going to be anything less $750,000 or less. That's going to be for 2024 until they update it next year. All right. In high balance areas, and this is going to go by how many units to the property. High balance area, Westchester County, New York City, right? Um, a jumbo loan does not happen until you're $1 over $1,089,000. On a two family, it goes up to like 1.1 or 1.2. Three families, four families, the loan increases. Why? Because these types of homes are more expensive and there's more units, so there's more income theoretically. So that's the first thing that's happened. The other thing that's happened is, FHA went ahead and reduced their mortgage insurance premium. I should say their PMI payment, right? It was 80 basis points of the loan amount That was your calculation for your PMI. Okay. I did $1 million loan last year, and they had to pay like 800 and something dollars. It's 80 basis points, right? Um, a month on your payment. Now they reduced that to 20 by 25 basis points. So let's take that same loan, $1 million, 80 basis points. They're paying $800 a PMI on an FHA loan, primary residence. Now it's down to 55 basis points. We just dropped it to $550 instead of 800. That's a huge savings. It's 250 bucks. So um, that's one thing they've done. And now, I guess maybe as a retaliation move, Fannie and Freddie have gone and changed some of the guidelines for purchasing multifamily homes. This is starting next week, ladies and gentlemen. November 18th, mark it in your calendars. This is when all of the DU, desktop underwriting, and the automated underwriting systems for Fannie and Freddie, or specifically Fannie Mae, they will be incorporating 5% down options on 2 to 4 unit homes. Whereas previously, if you were probably having to put 15% down on a 2 unit, 20 on a 3, and 25% or more on a 4 family home. Now if you can qualify, they will allow 5% down buying a primary residence conventional loan with Fannie Mae. I mean, that's huge. That's really, really huge. And a lot of people are like, well, FHA's been doing that for years. Yeah, FHA has been doing that for years, right? You can buy a 3.5% down multifamily primary home with a government financing loan, FHA, right? However, when you're doing a 3 or 4 unit home, there's something that's called a self-sufficiency test on with FHA, which means the house has to be sustainable with its own rental income in case you don't have one of the units is vacant or whatever that might be. So let's just say now, for instance, I actually did a loan recently that I still got it closed. It's one of the perks of being a broker. I failed this FHA self sufficiency test with this particular home. It was a home in Mount Vernon for $800,000. The borrowers were putting the minimum down payment on this 3 unit home, 3.5% down on 800,000. Now, in order to calculate and see if the home is going to pass the self sufficiency test, what happens is the market rental analysis for not just the other 2 units that are being occupied by renters, but all of the units in the home combined equaled on this particular property $7,100 in rent. Now, the FHA self sufficiency test says 75% of that market value. So 75% of 7,100 is $5,325. In order for it to pass self sufficiency, the total mortgage amount, principal, interest, taxes, insurance, PMI, and HOA fees applicable have to be less than that 75% value of 5325, 5325. Their mortgage was 68 and a quarter. So guess who failed? I did. So I had to find another product, go to one of my portfolio lenders at the time, who was able to do this option with 5% down. Now they've had to pay a little bit higher on the interest rate, and they had to show some reserve assets. It was a struggle, but we got it done. But the good thing with this Fannie Mae product and the 5% down option, they don't have that test. Doesn't matter what you're using. So that is out the door. Doesn't matter if it's a 3 or 4 unit home, there's no self sufficiency test when it comes to conventional loans. So this is going to be a game changer in the market, especially when people get back on their feet. So I'm actually really excited that this is coming out, and there's some very other good products out there as well. So, if anybody has any questions about how to qualify and what the parameters are, you can always reach me 321-634-2552. It's my cell phone. You can put my emails, first name dot last name at hudsonunited.com. And those are just some of the things that are changing in the market.
Now, you mentioned jumbo loan. What does that mean exactly to us?
Good question. Jumbo loan is any loan amount over that conforming loan limit. So right now it would be any loan amount $750,000 and $1 and higher, right? And what happens when you become a jumbo loan? Well, it's a non-conventional product. It's a non-conforming loan because it doesn't conform to the loan limits around the entire nation. Now, if you're not in a high balance area, let's say you're in um,
Connecticut.
New Haven, Connecticut, right? And you find a $800,000 home, that's going to be a jumbo loan. If your loan amount is 750,000 or higher. So what does that mean? Because it's non-conforming, it doesn't conform to the regular Fannie Mae or Freddie Mac conventional guidelines as it normally would. So now you have to adhere to any rules and guidelines that each bank has in place.
So
So
it makes every bank its own individual set of
yes,
rules.
it does. It's like a co-op, right? Every co-op has its own set of rules for qualifying. What's your debt to income ratio? Do you have reserves? What's your minimum? What's your FICO score? Are you a first-time home buyer? Now it's the same thing with a jumbo loan. Everything changes. Normally, they want like a 43% or lower back end debt to income ratio to qualify on a jumbo loan. If you're a first time home buyer buying a house of this magnitude, that 43% drops to a 38% or lower on the back end DTI. And then they want you to have 6 months of reserves or 12 months of reserves. What are reserves? Reserves are leftover assets after closing. So after all is said and done, you still have to have 6 months worth of your mortgage payment or more, depending on the price of the home, left over in your checking, savings, retirement, 401k, pension, stocks, bonds, annuities. It doesn't have to be liquid. It could be tied up in retirement or a CD. So these are the guidelines. And then, you know, everything else comes into play too. What's your credit score, right? Your credit score is going to definitely have an impact on, hey, what's your credit score based on this loan amount? What's your credit score based on this loan amount, right? Everything is tiered when we're talking about jumbo loans. So you really want to make sure that these people qualify with that particular lender. Rate isn't always everything. I mean, it is everything, but it's not everything. But you want to make sure at the end of the day, hey, listen, rate's not the problem right now. We got to get we got to mark all of these off our checklist to make sure you get approved with the bank.
So what I'm hearing is if you're not in the business, there are a lot of moving parts. And
Hmm.
just to say, I want to buy a house is not that simple because of everything that is associated with the purchase of a home. So, what do we say on PNN all the time? Save yourself time and money, hire a professional. If
Right.
you're going to buy a house, you've heard just I'm sure you just scratch the surface of what we need to do when we buy a house and all of these moving parts. So getting a house, you need to speak to Rick because your situation would be different from my situation. And you can go to those online mortgage things then and they don't do the underwriting. You don't know what's going to happen. Once, oh yeah, you qualify for a loan, and then you get hit with all of these things, and now what do you do?
Right. You want to make sure that you're pre approved, not pre qualified. Don't just go into a bank and say, I make $150,000. I have great credit and low debt. Do you really? You want to make so you're doing yourself a disservice. First off, you're doing your real estate agent a disservice, and then you're going to be doing the seller a disservice. I've heard so many people that deals have fallen through because somebody didn't do their due diligence. Maybe they used 2 jobs worth of income. Hey, there's nothing wrong with working multiple jobs. God knows we're all doing it. I know I'm doing it, right? However, there are rules, just like and guidelines in order to use that income. I can't just go start a job at Kohl's tomorrow and expect to use that income when I'm qualified for a mortgage. You need a
Right.
2 year history, ladies and gentlemen, for working 2 jobs simultaneously. And if it's part time, there's a different guideline for that. If you switch from full time to part time, there's a different guideline for that. everything comes into play. So do yourself a favor. If your credit, your income, and your assets have not been verified, you are not pre approved. They will run a credit report on you. They will ask you for your income documents, your W 2s, pay stubs, tax returns, whatever it might be, and they will check your credit and check your assets. If those things have not been done, you got a pre-qualified piece of paper. It's good enough to wipe your butt with, maybe, and just as good. So you really want something that is solid and firm and something that people can trust. I only do pre-approvals because people know that when they get a pre-approval for me, I have done my due diligence. But not only that, I'm putting my license and my reputation on the line, and there's nothing that I want to do to jeopardize doing that by issuing a crappy pre-approval. Not going to happen. Not with me.
As understood. Understood. Ricky, listen, man, it's always great to have you on. Could you let the folks know how they are able to reach you?
Absolutely. You can reach me by phone, day or night, or on weekends. It's one of the things. I'm not a 9 to 5 guy. I'm a 9 to 9 guy or an 8 to 8 guy. Really depends on when I just crash out at the end of the night. You can call
You're
me
eight to faint, as they say.
at 321-634-2552. It's my cell phone number. I work remotely most of the time. If you want to send me an email, it's richard.cusio@hudsonunited.com. That's C as in Charlie, I-U-Z like in zebra, I-O.
Nice, nice. Thank you so much.
You're
Ricky,
welcome, gentlemen.
when they say no, he says yes.
That's
Give
right.
him a call, check it out, send him an email, and get the ball rolling. Great time to buy a house. Sounds like they got some great plans out there. Oscar, any final words?
It's been a pleasure to see me again, as usual.
It's always a pleasure to see
Always,
you, gentlemen.
always, always. I'm going to tell. I'm going to send you a list of what I want for Christmas. Okay.
You got it.
I just want my two front teeth.
It's in the mail. Amazon has it. All right. Thank you
Yes.
guys again for watching, and thank you for seeing us. We're going to be here next week with Maggie Carey, who is a great marketer and talks about social media. So if you want to know a little bit more about social media and how to get your business and things going, Maggie Carey will be here next week. Take care, everybody, and see you around.